Welcome back to the second segment of the Tax Time Show. In this episode, today's episode, Ajay Kumar is giving us information on the losses, business losses. How you can take business losses, what are the rules attached with it, and whatnot. Right before the break, he gave us information on the net operating losses. But as I mentioned, there are several losses we're going to be discussing. Ajay Kumar, there's one loss which everyone talks about. All these losses are good that we're going to talk about it, but capital loss.
Absolutely.
Let's give out information on it.
Something that everybody has, especially in today's stock market. You have the capital loss. Capital loss comes from an investment. Stock market, selling of a property. You have a rental property you sold, and if you did not make money, if you did not get what you bought the property for, that can result into capital losses. What you need to understand that capital losses cannot offset your regular income more than $3,000. So for a company, for a C corporation, capital losses can be taken back 3 years and carried forward for 5 years. For an individual, capital losses cannot be taken back, but you can carry them forward forever. Please understand, please remember, maximum capital losses that can be used to offset your regular income is $3,000. Take an example. If your regular income is $100,000 and your capital gains are not there and your capital loss of $100,000, the maximum you can take against your regular income is $3,000. So you still have to pay tax on $97,000. You don't lose the remaining capital losses. You can take it forward for the next year, but you cannot offset all your income against the capital losses, Sanjeevji.
Okay, that's very useful information that you give us on capital losses, and it's good that you clear a little bit a myth right. surrounding capital losses.
Absolutely.
Let's go next to the ordinary loss.
Absolutely. So ordinary loss can be used to offset your regular income. Now consider an example. You have an LLC, you have an S Corp, a flow-through entity, and you lost money in that entity and you have been actively participating, actively working in that company. The losses from your flow-through entity, LLC, S Corporation, can be used to offset, to reduce your regular income, the W-2 income or any other business income. So contrary to the capital loss that you cannot use to reduce your income, only up to $3,000, the ordinary losses can be used to offset all of your income and create an NOL as needed for you to carry forward.
Okay, and that's also a very interesting point, as these are the various losses we're talking about related to business.
Absolutely.
My question to you is that how does gambling loss work, and is gambling loss only for the businesses or for the personal use also? I really have no idea how does it work.
Absolutely.
So let us know.
It's a common misconception. A lot of people don't really know that the gambling losses are tax deductible losses. A lot of people feel gambling is their pastime, their hobby, and the losses are not tax deductible. So first thing first, gambling losses do not apply to business. Businesses are not supposed to be gambling. Businesses are supposed to be making investments. Sometimes these investments are riskier than usual and feels like gambling, but business do not get into gambling. All gambling losses that we talk about are at the individual, personal level. Gambling losses are tax deductible to the extent of gambling income. Please remember, when you go to casinos, there is a document that you get, is called 1099-G. So any income that you had over there, any lottery winnings that you had over there, it gets reported to the IRS, it gets reported to the state. So onus remains on you. It's your responsibility to justify that you had invested, you had bought so many lottery tickets, you had put in so much money in these slot machines. So all that investment, all those losses that you had, they don't get reported to the IRS directly. You have to report it, you have to justify, you have to show the proof, the money going out. So all the gambling losses are deductible to the extent of gambling income. If you have more gambling losses, you lose them, you don't carry forward the gambling losses.
Is there a limit on gambling losses?
Yes and no. The limit on the gambling losses depends on your gambling income. If your gambling income is $10,000, you can claim up to $10,000 of losses. If your gambling income is zero, then Sanjeevji, you cannot claim any losses.
Okay, that's a good to know. And if somebody made, let's say, $500 throughout the year through gambling, casinos, or whatever it is, right? Do they still have to report that $500, or up to a certain amount you don't need to report it?
Well, the two different questions. So the reporting requirement at your level and the reporting requirement at the casino levels are different. If somebody won more than $600, casinos are mandated to report that earning, that income to the state and the IRS. That's $600 at a casino level. If you won even $1 of lottery income or anything,
You still have to report
you
it.
still need to report it.
Oh, wow. Okay. See, I told you I was confused about it.
Yeah,
That's
absolutely.
why I
A lot of
wanted
people
the-
are, Sanjeev ji.
Yeah, that's why
You're
I
right.
wanted you to clear up that confusion.
But
Okay,
don't go to
quickly.
casino, please.
No. It's not about going to casino. It's understanding how does it work.
Absolutely, I
Because
agree.
believe me, in a social circle, you may meet people. They talk about these things,
Absolutely.
and they may
absolutely.
not be aware of it.
A lot of people are not.
That's right. Before we go into the break, quickly, let's talk about hobby losses. What are the hobby losses?
So hobby losses are not tax deductible. You want to stay away from the word hobby. And the way the IRS defines hobby, if you have been losing money in your business, in your entity, year after year, IRS will try to classify that activity as hobby. Take an example. Say you are in dog grooming business, and you groom these dogs and then you sell them or put them into their homes, but you're not making any money, and year after year you are losing money. IRS will say, no, it's not your business. You are not in the business to make money. This is your hobby. If it's hobby, Sanjeev ji, then losses related, the expenses related to that activity are not tax deductible. So you want to stay away from the word hobby. Even if it's your hobby, create a business, show an intent to make profit out of it. And it's up to you to justify the intent. How do you show the intent in any business? First, you formalize the structure, create an LLC, S Corp, C Corp. Second, create a website, do some advertising, show that you have an intent to make profit out of it. So the IRS, the government, cannot classify this activity as a hobby for you. If it's classified as hobby, the expenses are not going to be deductible.
Okay, interesting. Whether it's a gambling loss or hobby loss or even capital loss, viewers, in case if you want to get more information, please send us an email, texttime@tvasiausa.com. That's our email ID. Mr. Ajay Kumar or Sai CPA Services will personally answer your email and clear any confusion or help you out when it comes to your tax returns and how to reflect those losses on a tax return. So once again, our email ID is texttime@tvasiausa.com. We'll be back after these messages. We're going to talk about theft loss, casualty loss, and the other losses coming your way right after these messages.